Hey everyone, thanks for joining us. And whether you're here live or catching the replay, we're coming up to the 1st of April and there is some important changes about payroll, KiwiSaver and PAYE that business owners need to be across. Before we start, just a couple of quick housekeeping things. We're recording this session, so if you want to revisit anything or couldn't make the full session, we'll send out the recording in 24 hours. We'd love this to be interactive as possible. So if you could head to the chat in your Zoom there and let us know whereabouts in New Zealand you're signing in from, that would be awesome. Awesome. Thanks, guys. Wonderful. We also have some time at the end for a Q&A where you're welcome to come off mute or ask your questions directly to the panel. If you've got questions, chances are someone else is thinking the same thing. So don't hold back. Awesome. So we've got another question here for you. And again, I'd love for you to put it in the chat. What is your role in your business? Perfect. So this just helps us who we've got on the call today. And we'll try and cover both business owner perspective and the people actually managing the payroll day to day. Why it matters. This isn't just admin in the background. This directly impacts your cash flow, your team, and whether you're staying on the right side of IRD. I'm Amanda Fleming from Virtual Coastie. We support busy tradies with behind the scenes with their admin and bookkeeping. And a big part of that is making sure that systems set up properly and nothing slips through the cracks. Why we've pulled this together. I know from working with clients, most business owners are flat out and this stuff gets pushed to the side until it becomes a problem. So we've pulled together a panel of experts to break it down for you. So I'd love to welcome you. So first up, we've got Val from Payroll Matters. She is a payroll specialist, and honestly, if there's one person you want in your corner when it comes to compliance and getting payroll right, it's her. She works with businesses to fix issues and make sure that things are set up properly from the start. And then we've got Jake. He's from Generate KiwiSaver and Wealth Advisor. He's going to break down what's changing with perspective, but also what it actually means for you as a business owner and your team. And finally, we have Emma. She is a virtual accountant working closely with small business owners day to day. She sees what's actually happening behind the scenes with PAYE, cash flow, and IRD. So she's going to bring that real world perspective. So another question for you. How confident are you with your payroll setup right now? If you can pop that in the chat. Looks like we've got some confident people. Wonderful. Awesome. So our first panelist, Valerie Broomfield, is a chartered accountant and payroll specialist and the founder of Payroll Matters. She works with organizations and strengthens compliance, reduces risk, and builds payroll functions that are accurate and reliable. Known for her straight-up, practical approach, Valerie partners with companies who understand payroll is too important to get it wrong. So handing over to you, Val.
Thank you, Amanda, and thanks for organising us to do this webinar. It's not always in our comfort zone, but it's a great thing to do, so thank you. I'll start with the minimum wage increase. So that's happening from the 1st of April, and the minimum wage is increasing from $23.50 to $23.95. The starting out and training wage also both change. They're always 80% of the minimum wage, so that's going to $19.16. The important thing here is that that rate increase comes into effect on the 1st of April. And that's a Wednesday, so potentially that's going to be a split pay period. Some organisations choose to just pay the whole pay period at their new rate, so they might get the 30th and the 31st of March at the new rate, or you're allowed to split it, so they have the 2 days at the old rate and then from the 1st of April onto the new increased minimum wage. The other thing that's happening, and I won't take anything out of what Jake's going to say, is obviously the KiwiSaver increase to 3.5%. This one's a little bit different. So the 3.5% comes in again on the 1st of April. That's mandated by the IRD. So that means any people that you pay on the 1st of April or after the 1st of April, that whole pay period which potentially could be March, is all at 3.5%. It kind of makes sense because the IRD work on the day that you pay your people is when is the day that it's due. That's the day you file your PAYE. So that's what's happening. So it could be a split period. The tricky thing is that most systems won't update till the night of the 31st of March. So if you're doing a pay run period ending, Sunday, the 29th of March, and you want to pay it on Wednesday, the 1st, you shouldn't open that pay period till Wednesday, the 1st, because that's when the 3.5% will be updated. If you open it before then on the Monday, like you normally would, to get your payroll ready, it won't be compliant and you'll get feedback from the IRD. So just keep that in mind. So what you need to do, this is what I'd do before the 1st of April. Check that your contracts and systems are updated. This includes salary staff. If you've got salaried staff on about the 48,000 a year, they potentially need to have a wage increase as well. The only other thing I want to say about the systems update is that Xero, for example, you need to do it yourself. They've sent out what you need to do, but they want you to update it. Xero is not my favorite payroll system, so if you're using Xero, you potentially need to look at changing. HR updates. I'll keep this high level, but these are important. There's a new contractor gateway test. If you've got contractors in your business, there are 5 criteria and all must be met. There are also changes to personal grievances, particularly around employee contribution to the grievance, which can now reduce or remove remedies. This is a change in favour of the employer, and it's kind of been a long time coming. There's also less focus on process and more on outcome. For example, somebody in your business does something that you'd qualify as a serious misconduct and you dismiss them immediately. They can't come back to you now and say that it was unfair dismissal. The process is important. It's the outcome. So finally, the 200K threshold. Anyone in your business on 200,000 or more potentially can't put a personal grievance against your business. That's a good thing and a bad thing. It involves renegotiating the contract. Like I said, this is high level. If it matters to you, we can catch up on this a bit later on. And that's the update. What this means, just summarizing, your payroll must reflect what's actually happening. So look at your contracts, what's happening in the payroll and make sure they match. Check that the systems are working as they should. Have a look at it now. And for those of you that do run your payroll in-house yourself, Payroll Matters has a subscription service where you can call me, unlimited calls on a monthly basis to check what's happening with your payroll if you've got questions. Over and out. Thanks, Amanda.
Awesome. Thanks for that, Val. So another question here for you. As a business owner, are you actively contributing to your KiwiSaver for your own retirement? If you can pop in a yes or not currently. Oh, great. We've got some yeses. That's a bonus. I know some tradies that don't. Awesome. Okay, so this is a really interesting one. We see a lot of business owners prioritizing their team's KiwiSaver and not necessarily their own. So Jake's going to talk through not just the employer obligations, but also what it means for you personally. So Jake is a KiwiSaver and managed fund specialist with Generate KiwiSaver. He has a passion for unlock their potential through knowledge and support. Generate is an award-winning provider helping Kiwis retire on their terms. Feel free to reach out for no obligation free chat. So take it away, Jay.
Thank you very much, Amanda. And just to echo what Val said, thank you for hosting today. It's a great opportunity to catch up, especially with the impending 1st of April changes. So hi, everyone. My name's Jake. I work with Generate KiwiSaver to help Kiwis understand their KiwiSaver more. It's something that is often neglected, particularly by business owners, and they don't take full advantage of it for themselves, but also for their employees as well. So what I want to cover off today, it will be relevant to the changes coming into effect on the 1st, but if anyone has any further questions, would like to take further analysis for themselves, their family or their business, we can always take this offline because we'd love to support you on this journey. Now, the first change to be aware of, and this is a big one, is, as Val mentioned, a change to the default rate. Now, why this is important to be aware of is because this is for both yourself as the employer and employees as well. So effectively, people are going to be getting an extra 1% put into their KiwiSaver from both parties. Now, this is a fantastic step forward for compounding investment and long-term savings, But of course, this means that there will be a lot of changes to your payroll and your systems in place. It also means that there's an option for a temporary rate. Now, this is another change that's coming into effect and something to be aware of as well. So if you've got any of your staff that are looking to be at a lower level, i.e. they want to stay at that 3%, it's important to know what your obligations are in this environment as well. If an employee opts to stay at 3%, you may also stay at that 3% level as well, and there will be a time limit on that, and that's something for the employee to discuss with the IRD. So make sure you have it in your systems to understand that timeline so that you can provide the full support. Now, of course, we do encourage that you kick off the 3.5% ASAP because we want to help people towards their retirement as effectively as we can. Now, the third change and the most exciting one is the youth contributions. Now, a lot of people are leaving school or even picking up part-time work and getting into the workforce earlier. Now, KiwiSaver historically has really kicked into effect for those 18 and up, and now we're including 16 and 17-year-olds to get the full experience of KiwiSaver. So if you've got a 16 or 17-year-old working for you or children of your own, it's important to know what that looks like. Now, if they enroll through a default setup through their employer, sometimes the IRD may reject this due to no parental consent. So it's important that all youth are setting up through a KiwiSaver provider to ensure that it's set up correctly for them with the correct consents in place. What this will also look like is that the youth can take advantage of the government contributions and also take advantage of the contribution from themselves and the employer. Now, while 3.5 is the minimum currently, this will increase to 4% in 2028. So look out for those changes again. And of course, being an election year, there is a lot more discussion around future changes that could be coming. So, obligations and opportunities for you and your business. But you've got to remember that this is an opportunity for your staff to appreciate how you're giving them a head start towards their first home or retirement. A lot of people look at KiwiSaver as this thing that they have to put in towards until they get further along in their career and they wish they got more involved at an earlier stage. It's a very common cycle that we see. And we are seeing as well that a lot of people aren't able to retire comfortably, or they're still working beyond 65 because they haven't taken the time and energy to get this set up correctly for them. So it's a good reminder to let your staff know that you are helping towards their future. And if you ever want an opportunity for a KiwiSaver advisor like myself to come in and see the team, we can help them understand what you're contributing towards and make sure that it's aligning with their goals. Now, there are some iffy circumstances. One I'm going to raise is total remuneration packages. If you have a contract with an employee where they pay their annual KiwiSaver contribution, this gets a little more complicated, purely because you're now asking them to contribute 1% more out of that total remuneration package. And this, of course, might have an impact on their cost of living circumstances as well as their income. It's quite a big jump. So worth a review, worth a check-in, just to make sure that your employees are going to be okay. And it's important that you also look at it from a business point of view of what this additional cost is going to create. If you have one or two staff, you may be able to absorb these costs quite easily. But if you've got more staff, this is a much bigger picture that you need to make sure is within the budget. Now, just a heads up as well, Val's given you the deadlines, but if you are to miss deadlines with these payments, it does become a breach of the KiwiSaver Act. And if you're ever unsure, I always encourage people to seek the right advice. So in this case, it might be legal advice, accounting advice, or if you need assistance on the KiwiSaver space, KiwiSaver advice. So just a quick run through with the checklist of what we need to achieve. Make sure you know where your business is at the moment. What are your staff doing with KiwiSaver? Are a lot of them on that minimum rate, or are a lot of them already contributing above that, therefore no changes need to happen on their side? It's important to be aware that every new employee you bring on board, you'll need to update future agreements so that it includes the 3.5%. Now, a change in law does supersede historical agreements, so it's important to know that even if you've got historical contracts stating 3%, 3.5% now becomes the legal mandate. If you've got any employees who are talking about tough times and wanting to potentially look at rate reductions, it's important that you support them on this and make sure that you know the timeline that they're on so that you can kick into that 3.5 when both you and they are ready. And it's important your payroll systems are supporting this. Nothing's worse than getting a year or two down the track and having to audit everything and finding you're in a big mess. So it's important you stay ahead of the game and make sure you take advantage of everything as it changes on the 1st of April. So just the last little note from myself, I work with Generate, one of the many KiwiSaver providers, to enhance New Zealand's understanding on their KiwiSaver journey. So it's important to know that if you, your family, or your staff would appreciate or benefit from a KiwiSaver education, we have advisors located nationwide. We can come in and see you, organise a Zoom, whatever works to make sure that your staff is getting the most out of this. So it's an opportunity to upskill yourself, upskill your staff, and make sure that they feel supported in the money that you're putting towards their future. The QR code on the screen now will take you to a landing page to put some information down that'll come direct to myself so we can book in a time to catch up. Generate's an award-winning provider doing fantastic in the space of customer engagement, performance, and responsible investing. But we can go into that more in person. For now, Amanda, I'll pass it back to you.
Awesome. Thanks so much for that, Jake. It's such an important topic. Another question for you. Are you always up to date with your PAYE payments? This is really important, but I know there are a lot of businesses out there who struggle with this, but this is exactly why this next part is so important. Oh, look at that, Emmy. There's lots of people that are up to date with their PAYE. That's exciting. Awesome. So introducing Emmy Diver. She is a virtual accountant and founder of Balance Books, working closely with small business owners to keep their numbers clear, their systems running smoothly, and their compliance sorted. She supports clients across New Zealand and known for making the behind the scenes of business feel simple and manageable. Her focus is on ensuring everything is done properly and nothing gets missed, with a strong emphasis on keeping businesses compliant and on track with the inland revenue, so business owners can confidently focus on running and growing their businesses. Take it away, Emma.
Thank you very much, Amanda. Oh, and also thanks to Val and Jake. I think it's been really informative so far, and I hope it's given everyone a really good understanding of what's changing and what it means for from a payroll and a KiwiSaver perspective. Okay, so Val covered how to get the payroll right, and Jake covered the KiwiSaver side of things. So I'm going to talk about what happens if payroll filings and payments aren't kept on track. So from my side of things, what I'm seeing at the moment isn't just changes, it's the increased visibility and pressure from the IRD around PAYE. Inland Revenue recently issued a revenue alert, which is actually quite rare. It's a direct signal from the Commissioner about areas of concern. And this particular alert makes it very clear that failing to pass on PAYE deductions is considered a serious offence. IRD have warned that if deductions made from employee wages and not paid through can lead to prosecutions and, in some cases, imprisonment. They have already successfully prosecuted a number of cases in this area. And importantly, company directors can also be held personally responsible. So if a decision is made not to pass those deductions on to the IRD, that responsibility doesn't just sit with the company, it sits with the director as well. So what this means is that it isn't something that's sitting in the background anymore. This is something that the IRD are actively watching. So one of the biggest things to understand here is that PAYE is not business money. When you deduct PAYE, KiwiSaver, student loan repayments, and things like child support from wages, that money is simply held on behalf of the IRD. It doesn't belong to the business. And this is where things can slip up, because if that money is treated as available for use, it can feel like that cash is just sitting there, and especially when cash flow is tight, using that money, even temporarily, is where the risk begins. So with payday filing, the IRD can see what's happening in real time. It's not something that can sit quietly in the background anymore. And something that people don't always realise is that it doesn't always start with the IRD chasing you. It can start with an employee querying something about their own situation. And that can lead back to your filings, your payments, and your records. And so it's much more visible than it used to be. Because of that visibility, it's really important to keep your filings up to date and your payments are being managed properly. because IRD are relying on that information being correct and current. When things aren't filed on time, or payments aren't made on time, or there isn't a plan in place with the IRD, this is where it can start to show up for you financially. And it can really start to hurt. So once penalties and interest are added, so we're looking at like late filing penalties, non-payment penalties, ongoing use of money interest, and just as an example, the non-payment penalties do start at around 10% of the amount owing. So if that remains unpaid, additional penalties can add up over time. And then you've got the interest continuing on top of that. So it doesn't just sit there, it keeps growing. And I've actually got a real life example at the moment. So I've got a client who had an original amount owing of PAYE that was sitting around $4,000. That amount has now grown to $13,000. That is more than $6,000 just in the non-payment penalties. And that's just one period. And they have multiple periods outstanding. So you can see how quickly that adds up. So in this particular case, the client just happens to be selling their house. And instead of that money going to their next big step, a big portion of it is just simply going to clearing IRD debt. And I'm sure you'd rather see that money going towards another property or your business or a holiday. I am sure everyone's got something they would rather be spending the money on. So the key point to all of that is that the whole thing is, it is avoidable. So if you're a little bit behind or even a little unsure, the most important things are file your returns anyway, even if you can't pay. There's no benefit in delaying, and the filing actually helps reduce further penalties. It's also recommended to contact the IRD early, because the earlier you engage, the more options you have. And then obviously get support if you need it. This is one of those areas where if you have someone in your corner, it can make a big difference. You will be surprised at how something that starts small can turn into something much bigger than it ever needed to be. So just to close off, my biggest advice is don't let PAYE sit in the background. It's one of those things that if it's set up and managed properly, it stays simple. But if it's not, it can get really expensive quickly. Okay, so that's all from me for now. I'm happy to take questions, but I'll hand back to Amanda to take us into the Q&A.
Awesome. Thanks so much for that, Emmy. I actually had a phone call this morning from one of my clients to tell me that he's only got about 12 grand left of 125 that he had last year. And he's like, I was like, man, that must feel good. And he's like, yeah, would not believe how good that thing. I'm like, 12 grand would freak me out. But anyway. All right, then. We've covered a lot there, and let's get into some open questions. Feel free to pop your questions in the chat, or if you're more comfortable, come off mute and ask directly. There are no silly questions. If you've been thinking it, someone else probably is too. What are the 5 checks for the gateway contractor?
Oh, I haven't got them in front of me, Hamish, but they are, the employer of the contractor can't dictate when they work. So they need to be able to do the work at their own time. They can't tell them when they have to work. The second one is they always have to be able to work somewhere else. So if you've got a contractor and that's working for you 5 days a week, that's not going to be a true contractor because they can't technically work for other people. The third one is they should be allowed to have somebody else do the job. This is a tricky one. So if you're contracting a business in, for example, you're contracting in your financial controller, and then the financial controller says, oh, well, I want to contract somebody else in. You can't stop them doing that. But it's tricky because in some cases that might be the specialist you've got there. If you put your email in, I'll send you what the other 2 are. I just don't have them off the top of my head. If you don't meet the 5, then the old rules of contractor apply. So it's just quite good to have these 5 and know that if you meet them all, you're okay. But I'll get that to you in an email.
Awesome. Yeah, we can definitely put that out when we send out the We can send that out to everyone, Val, when I
okay.
send out the recording. So
Okay.
that would be awesome. Abby is asking the best way to advise staff of the 3% increase for both employee and employer.
Yeah, there's a few different ways you can obviously advise your staff depending on team and culture. I think the main thing to do is just let them know before that pay packet comes out, because the pay slip that it's first implemented will be a little bit different. So they'll see the numbers, they might question why they're receiving less after all the deductions. So I definitely would encourage, whether it be over a staff meeting or via email, to let them all know that these are coming into effect. If people have any questions around what that means for them, the main thing to remember that this is being done to build people up to have more at retirement. If we look at the rest of the world, we do put in quite a low percentage on global standards. So Australia, a lot of places are 11 or 12% as a standard. So we're kind of rising to that. So it's important to just let them know that that's the motivation. And if they've got any questions, we're here to help.
Awesome. Thanks for that, Jake. Does anyone want to jump off mute and just talk? Jake, I've actually got one for you because I came prepared with a few questions because it's a conversation I have with my clients. But is there a maximum that a business owner could put into their KiwiSaver?
Is a great question. And we are seeing it more and more in regards to following the standard payroll structure. It follows the same 4, 6, 8 or 10 voluntary contributions above the minimum level. So for example, you don't have to have them the same. The legal obligation to your staff is to match them at the minimum level, but you can opt to put in more. So I've seen people put in more for themselves as business owners. They might do 6, 8 or 10% as a business owner. They may even do that for staff as a retention tool who stay for a certain period of time. So there are lots of ways that you can utilize the employer contributions to your advantage. And that's a big one that we do see, is more and more companies are paying their management above the minimum from the employer side.
Awesome. And we've got another question here. Do you have to raise all staff for the minimum wage changes?
Yes. Yes, the minimum wage is the lowest dollar value per hour that someone can receive. So if somebody's on less than that, yes, you raise them. If you've already got somebody within their 6 months of being on the starting out wage, then they just go up to the 1916, and then at the end of their cumulative 6 months, they go to the minimum wage. Was that what the question was?
IEA in their staff. So I'm not sure if that means.
Individual employment agreement. If they've already got an employment agreement that says you'll be paid $23.50 an hour, you don't have to update that, because the law comes ahead of, you can't contract out of your legal obligations, so you can't contract out of paying them the minimum wage. I always recommend an addendum or an email, just a record saying, please note that as of the 1st of April, in line with the legislation, your pay will go up to X, and just keep that with your employee record. But if you don't send that out to them, you still have to pay the minimum wage, and you're not breaking any laws by not updating the contract for that particular item.
Awesome. Yeah, because any changes like that, Val, right, when it comes to payroll, there should be an addendum added to their contract, like if you just gave them a regular pay rise as well, right?
Definitely. And I think Rosemary asked, does it apply to part-time and casuals? Yes, it does. Yeah.
I was going to get to that one. So yeah, thanks for that, Rosemary. Is there any other questions from the chat? Emma, what's your advice for business owners that are struggling with cash flow and therefore the PAYE?
My biggest advice would be to prioritize this money over possibly other IRD debt. PAYE should always be at the top. Definitely get in touch with someone who can talk you through how the cash flow process could help with budgeting and getting that. Yeah.
Because it all comes down to having that conversation, right, and making an attempt to get rid of it. So
Yeah,
I try and recommend to clients where cash flow's tight, you can choose to pay your PAYE on the same day you pay your employees. So generally that's just tick a box, include my tax payments. So all the KiwiSaver, employer and employee, the PAYE, any deductions, it's like your gross pay gets paid out on that date. Then you never have any PAYE debt.
yeah, and that's what we do for our clients as well, is just get them on that. Then they don't have to think about it on the 20th of next month. It's gone already. I just think that's an awesome feature with the payroll with some of the payroll softwares. Awesome. Any other questions? Otherwise, we will get ready to wrap this up. So just one more thing in the chat for you. I'd really like to know, what is your key takeaway from today, and what is your next that you need to go out and do for your teams? Right. And then the last one there, everyone's contact details. So before we wrap up, I just want to say a big thank you to our panel, Valerie, Jake, and Emma. I really appreciate you taking the time to share your knowledge, and I know how valuable it is for business owners, especially with these changes coming up. If anything we have talked about today has raised questions for you, I highly recommend that you reach out directly to any of our panel here. Their contacts are on the screen. Take a photo. I will also be including this in the replay when I send it out. We are always here to help and ask questions, because this is one of those things that we don't want to get wrong. Awesome. Thank you so much. Have a wonderful rest of your Friday, and at least the sun shines out in here in Auckland. Thank you.